Welcome to the Deep Dive. Today we're digging into Rigel Pharmaceuticals' Q2 2025 earnings call. And wow, this quarter really looks like it could be a turning point for them.
Yeah, absolutely. Our aim here is to unpack these results for you, get past just the surface numbers, and really explore why this quarter matters so much for Rigel's path forward.
And maybe what it signals for the broader biotech space, too.
Exactly. And what jumps out immediately is that Rigel didn't just meet expectations. They significantly outperformed. This wasn't just a minor beat. It suggests their strategy is really starting to click.
Right. And when we say significant, we really mean it. Rigel reported Q2 numbers that blew past analyst forecasts pretty much across the board. Their GAAP diluted EPS landed at $3.91. That's way, way above consensus.
And zooming out a bit, the top line, the revenue story, is even more dramatic, wouldn't you say? Total revenue climbed to $101.7 million. The forecast was closer to, what, $64.6 million?
Yeah, so way above. That's a huge 176% jump year over year. A leap like that isn't just a good quarter. It feels more like an acceleration, like their commercial engine is really firing on all cylinders now.
Mm-hmm. And that engine, the core of the business, is their product sales, right? Net product sales hit an all-time high, $58.9 million.
Which is a 76% increase compared to last year. And it wasn't just one product carrying the load, it was growth across their whole commercial portfolio.
And this strength flowed down to the bottom line, too. A substantial GAAP net income of $71.1 million. That's a really positive swing from the net loss they had in the same quarter last year.
Plus, their cash position looks healthier too. Cash and short-term investments saw a nice increase, so a really strong financial picture overall this quarter.
Which brings us to the key question.
Yeah.
What exactly drove this really impressive commercial momentum? Because it wasn't just one thing, was it?
No, definitely not. It seems like a broad-based success story from their established products. Let's maybe break down that record. $58.9 million in net product sales.
Good idea. Because while all three commercial products contributed, TAVALISSE really seems to have led the charge.
Yeah, TAVALISSE's performance was, well, stellar again. Record net product sales of $40.1 million. That's up 52% year over year.
And management said this was driven by continued strong demand from new patients, another record quarter for new patient starts, actually.
Right, plus more carryover demand. So patients who are already on the drug are staying on it. That suggests, good product acceptance and stickiness.
And here's where it gets really interesting and potentially has wider implications beyond just Rigel. They specifically called out the positive impact of the Inflation Reduction Act, the IRA.
Ah, yes, the IRA. Specifically, the changes to Medicare Part D kicking in for 2025.
Exactly. The elimination of that coverage cap, the so-called donut hole, and the introduction of a $2,000 annual cap on out-of-pocket expenses for patients.
Think about what that means for someone needing an ongoing medication like TAVALISSE, which is an oral drug. Those upfront costs at the start of the year could be a huge barrier.
A massive barrier. Now, with that $2,000 cap, it dramatically improves affordability and access, and Rigel saw this directly impacting new patient starts.
And it also helps their gross to net figures, right? That's the difference between the list price and what the company actually books as revenue after all the discounts and rebates. Better access, fewer affordability programs needed, perhaps?
Precisely. It improves those dynamics. So you've got this powerful combination, smart regulatory changes providing a tailwind, plus strong execution by Rigel's commercial team. It's really propelled their oral therapies.
Okay, so TAVALISSE was the headliner, but the other products chipped in significantly too.
GAVRETO brought in $11.8 million in net product sales. That's up a healthy 32% just from Q1 of this year, so good sequential growth.
And they mentioned they're working on increasing awareness for GAVRETO, especially trying to get it used earlier in the frontline setting where these re-inhibitors are recommended. Makes sense.
Yeah, positioning it earlier is key. And then there's REZLIT-HIA. It added $7 million in net product sales, which is up 36% year over year.
And wasn't there some recent data on REZLIT-HIA presented at ASCO?
Yes, back in June. The data basically supported using REZLIT-HIA earlier in the treatment journey for patients with relapsed or refractory AML.
Okay, so patients whose disease came back or didn't respond initially.
Right. The study showed better overall response rates and, importantly, longer median overall survival if patients got REZLIT-HIA after fewer prior lines of therapy. That kind of data can really shift how doctors think about prescribing it.
So strong domestic performance, clearly. But they're also looking outwards, expanding internationally.
They are. TAVALISSE just launched in South Korea in early July. That's through a partnership with Kissei and GW Pharma.
That's smart. Spreading the geographic risk, not being totally reliant on the U.S. market.
Definitely prudent. And Resolutia is also growing its international footprint. They've expanded relationships in Asia and signed an exclusive license deal covering Dr. Reddy's territories.
These partnerships seem like a capital-efficient way to grow, right? Leveraging local partners instead of building out everything themselves globally.
Exactly. It lets them extend their reach without massively increasing their own operational spend. Smart strategy.
Okay, so the commercial side is humming. Let's pivot now to the future building side. Strategic collaborations, pipeline progress. There was an interesting item with Lilly this quarter.
Ah, yes, the collaboration revenue. Rigel booked $40 million in non-cash collaboration revenue in Q2. Important distinction there, non-cash.
Right. And this came about because they decided not to exercise their opt-in right on a drug called Akato DeSertib, formerly R552.
Correct. It's a non-CNS penetrant RIPK1 inhibitor being developed with Lilly. Opting in would have meant sharing future development costs and potential profits down the line.
So deciding not to opt in triggered this $40 million revenue recognition.
Essentially, yes. It significantly boosted their reported GAAP net income for the quarter. Now, some analysts flagged this as maybe an earnings quality caveat, meaning it looks good on the income statement, but wasn't actual cash coming in the door this quarter.
But it's not like they walked away from the drug entirely, right?
No, not at all. And this is crucial. Rigel is still eligible for future milestone payments and tiered royalties from Lilly if Akato DeSertib succeeds. Plus, they have another RIPK1 program with Lilly, a preclinical one that does penetrate the central nervous system, and that's moving forward too.
Okay, so it's a strategic financial decision, not abandoning the potential value. Good clarification. What about their own internal pipeline, R289? What's the latest there?
R289 is their novel dual IR cortiquine inhibitor. They're studying it in lower risk MDS, that's myelodysplastic syndromes, a type of blood cancer.
Right, for patients whose disease is relapsed or refractory?
Exactly. They just completed enrollment in the dose escalation part of the phase 1b study back in July. These lower-risk MDS patients often rely on transfusions, so there's a real unmet need.
And they're planning to share data soon.
Yep, updated dose escalation data later this year in 2025. And they expect to start the next phase, the dose expansion part, in the second half of this year, possibly even this quarter, Q3.
And didn't R289 get some special FDA designations?
It did, both fast track and orphan drug designations.
Which signals?
Well, fast track means the FDA sees it as potentially addressing a serious condition with unmet need, so they'll try to expedite the review process. Orphan drug is for rare diseases, offering incentives. Together, it highlights that the FDA recognizes the need, and it could mean a quicker path to potential approval.
And they're already talking to the FDA about what a registrational study might look like.
Yes, those discussions are ongoing. It shows they're thinking ahead about the path to market.
Okay, so R289 is moving along nicely. What about elutasidenib, their IDH1 inhibitor? Are they just focused on AML?
No, they're actually looking beyond AML. Elutasidenib targets the IDH1 mutation, which occurs in other cancers too. So they're exploring its potential in recurrent glioma, for instance.
Glioma, a type of brain tumor.
Right. They have collaborations set up, one with the Connect Cancer Consortium for high-grade glioma, and another with MD Anderson looking at AML, MDS, and potentially other areas. Studies are open and enrolling. It's about maximizing the potential of the assets they have.
Makes sense. So, with all this momentum, commercial success, pipeline moving forward, what's their thinking on bringing in new things? Business development.
They were pretty explicit about that on the call. They're actively looking for more in-licensing deals or even acquisitions.
Focused on.
Late-stage hematology or oncology assets.
Yeah.
Things that would fit with their existing commercial setup and product focus. It signals they're ready to use their stronger financial position to grow externally, too.
Okay, let's tie this together for you, the listener. What does this all mean? This quarter feels like Rigel's commercial plus collaboration strategy really hit its stride, doesn't it? Showing real financial leverage.
Absolutely. It feels like an inflection point.
Yeah.
And you see that reflected directly in their updated guidance for the full year 2025. They raised it significantly.
Talk us through those numbers.
Okay, total revenue guidance is now $270 to $280 million. That's up from a previous range of $200 to $210 million. Big jump.
And product sales.
Net product sales guidance lifted to $210 to $220 million. Previously, it was $185 to $192 million. That implies something like 45% to 52% growth year over year for product sales. Really strong.
And collaboration revenue guidance also went up, partly because of that $40 million non-cash Lilly item we discussed.
Right. That's now guided to around $60 million for the year, up from $15 to $18 million. But maybe the headline here, the really crucial bit from the guidance update.
Is that they now expect to achieve positive net income for the full year 2025.
Exactly. Profitability for the full year. That's a massive milestone. It positions them as, a self-sustaining company.
Which is a big deal in biotech. It speaks to financial discipline and achieving scale. And their balance sheet backs this up cash, and investments grew to over $108 million by the end of June. Gives them options.
Definitely gives them flexibility. And if you step back and compare Rigel to the wider biotech sector, using the XBI index as a proxy.
It's quite a contrast, isn't it?
It really is. While the XBI has been down maybe around 8% year over year, Rigel's stock has had a trailing one-year return of something like positive 170%.
Wow. That kind of outperformance suggests it's not just market tide lifting the boat, right? It's company-specific success.
Yeah, it highlights their idiosyncratic story, driven by their own execution and strategic moves. Management sounds confident about growth continuing beyond 2025 too, pointing to that commercial momentum, the IRA benefits, and the pipeline catalysts coming up.
Okay, time to shift gears. Let's move into our This Is Not Financial Advice segment. This is where we brainstorm a slightly out there but maybe plausible trade idea, kind of like you might hear batted around on a trading desk.
All right, let's hear it, given everything we've discussed.
So Rigel's got raised guidance, a stronger cash position, and they've explicitly said they're hunting for late-stage assets in hemonc. Here's the thought. The pre-catalyst acquisition play.
Okay, intriguing name. Go on.
Instead of just playing Rigel for the upcoming R289 data readout later this year, what if you took a long position anticipating something else? Betting that management, feeling confident after Q2 and with more cash, pulls off an unexpected deal before the R289 data hits.
So like an accretive in-licensing or maybe even buying a de-risked late-stage asset.
Exactly. Something that could add significantly to revenue relatively quickly, maybe in 2026. They'd be using their current strength, maybe taking advantage of lower valuations elsewhere in biotech to accelerate growth even beyond this new higher guidance.
So it's less a bet on the R289 data itself and more a bet on CEO Raul Rodriguez and his team using this window of opportunity and financial flexibility for M&A.
Precisely. A bet on their deal-making ability right now rather than just waiting on the organic pipeline development. Plausible, maybe a little bold.
It's definitely bold, but based on their stated intentions and improved position, it's certainly a scenario you could construct. An interesting angle.
Okay, so wrapping this up, Rigel Pharmaceuticals put up a truly impressive Q2 2025. Record product sales, pipeline moving forward, and a much brighter full-year outlook, including expected profitability.
And that Inflation Reduction Act impact is a key factor to remember. It's provided a real tailwind for patient access and their commercial efforts, especially for oral drugs like TAVALISSE.
They've got a solid balance sheet now, a clear strategy mixing internal growth and looking for external opportunities. Definitely a company that's gained attention.
Yeah, the big question hanging in the air now is, what do they do with this strength? How do they deploy that capital? Will they find the right external asset? And how quickly can they convert both pipeline progress and any potential deals into sustained value?
That balancing act between execution and strategic expansion will be fascinating to watch. It really defines their next chapter.
Agreed. Lots to keep an eye on.
Well, that's our deep dive for today. Thanks for tuning in. Join us next time as we continue to explore the stories behind the tickers.